Yes, perfect. So what have we talked about so far? So far, we have talked about mainly about cycles. So first off, of course, identifying the emotion that we are dealing with and then finding the cycle that we are dealing with. Once we find that cycle, then we can of course stop the cycle by injecting logic. That is what we want to do. We have the cycle. We want to get better at knowing ourselves, better at knowing the cycle that we are dealing with. And afterwards, we want to break the cycle by injecting logic. That is exactly how we fix, quote unquote, fix our psychology. So what are the steps that we take in a trade ID where we are getting mentally challenged? So what do I mean by that? For example, you have your before analysis, you have the trade setup itself, you have the risk management, there's a step to getting to a trade ID, and you have the aftermath, etc. Everything there is a mental challenge. There are small underlying mental challenges. Now, the first thing I need everyone to understand is, in order for us to actually focus on psychology, we need to at least know where and when to enter. So what do I mean by that? We know, or at this time, I knew I wanted to enter where, that is the daily fair value gap, and I knew when I wanted to enter on that Wednesday right there and on the lower time frame right there. And I know my exact entry pattern. So I've written down as well is, as long as you know where to look for an entry and what your lower time frame entry pattern looks like, then it's fine. Then it's fine. That's basically everything you need to know in order to not mess up your psychology. Now, of course, your break-even rules, the small rules like take profit, etc. These are also things we need to know, what we will touch on. But those are the most likely fuck-ups I wrote down right here. And what is that? That is, again, where to look for an entry and what your lower time frame entry pattern is. So where to look for an entry in the daily fair value gap and what my lower time frame entry pattern is. That is what I need to know before I even get into the trade ID itself, right? I need to know where to enter, and I need to know my lower time frame entry pattern. Those are very important to understand. So, as well as where to get out and when to go break even is also what I've written down. So I want to start off with, right here, we have our first step. That is a before analysis. So every step that we take here, there is some kind of mental challenge, right? Now, when I did my before analysis here, what could be a mental challenge? Since this was a high probability and I saw it coming that we were likely sticking into that daily fair value gap and then continuing higher, it was extremely high probability based on the technicals that we talk about, etc., etc. So in that case, there was not really a mental challenge. But before that, before going over all these pairs right here, all these pairs and even all these pairs right there, and even all these instruments right there, there are a lot of mental challenges. Why is that? Well, if I was to look at Australian dollar, US dollar, for example, and right here, I was looking and on daily, I can't see really anything clean. On the 4 hour, right here, can't see really anything clean. And on the 1 hour, I can't see anything clean. We do have our value gaps. The mental challenge is there. If you look enough at a certain pair, so if you look long enough at a certain pair, it will always be clean. And that is the mental challenge, because people sometimes, and this is from my experience as well, of course. From my experience, if I stare at a chart too long, I will find a trade ID. And with a trade ID, I don't mean that it's high probability or a good trade ID. I will just find a random trade ID because I stare at the chart long enough to find a trade ID. It's a confirmation bias. It's you're forcing an ID right there. And that is very dangerous. And that's what a lot of people tend to do. And what I also did is I was trading the whole entire day and I stared at the chart. And of course, I came up with an ID because I was staring the whole entire day at that chart. So that is very dangerous. A high probability scenario is seen within 5 seconds. Now, because I want to, of course, touch on things in the forecast, etc. But if I did my own forecast, it would be done in a minute to go over all the pairs, all the instruments. And of course, a little bit of an exaggeration, but it would be done way quicker because I can already tell in my mind, all right, this is high probability, daily fair value gap, weekly fair value gap right there, easy target, perfect, that I want to trade that. That's it. So the mental challenge right there is not forcing anything. And I've as well written down paralysis analysis. If you stare at a chart too long, forcing something. So forcing something, and with paralysis analysis, I also mean that if you don't stick to the easy top-down analysis that we use, for example, then it's very easy to get caught up in all these different concepts, all these different concepts from outside of our mentorship here. And what then happens is that you have a lot of contradicting things. When we have contradicting things with the concepts that we know and teach here, then we know it's low probability. But when we incorporate thousands of concepts outside that are from outside of the mentorship, then we have a lot of conflicting biases and we don't necessarily know, is it high probability, is it low probability? We can get very easy to a guide with low probability, high probability. And that is all that we want. And we don't want to stare at a chart all day to force an ID. It needs to come very naturally. And again, that of course, I can understand if at the beginning you have somewhat of a difficulty with that. No problem. That's no problem at all. But over time, if you give it time, etc., it will come to you. And once a setup like that happens, for example, if you were able to call this move right there, then it sort of justifies the idea or reinforces the idea into your brain. Ah, yes, this is exactly what high probability is. And once you experience that more and more and more, and you also experience low probability, then eventually it becomes easier, right? So that is the mental challenge. And that is already the first step, before analysis. So before analysis, that is already where you can mess up. That is very important to understand. If you already mess up there, then the story is over, right? You're not starting off good. Let's put it that way. So the second step, what is the second step? Is waiting for a setup. So whenever I had this daily fair value gap right there, I know before I go into the 15-minute what I want to see. I want to see an ST plus a RE. Again, not going to define that right here. We went over it in execution and high time frame week. But I want an ST plus a RE on the 15-minute and I want to enter on ideally a fair value gap right there. So that is already, I already have set out something in my mind of, all right, perfect. I want to enter off of that. I know what I want to do. If you don't have that, then I'll show you. If we go into the 15-minute time frame right there, and we have this fair value gap already higher, and we enter off of that, then that would stop loss. Then eventually that right there is a potential entry. But again, if you don't have an entry pattern, then you're all over the place. And when you don't have a set entry pattern, what happens is you go into the lower time frame and you see a breaker block. You see this breaker block. You see that fair value gap. You see this order block. You see that mitigation block. You see all these things and you don't know what to do. So you sort of subconsciously start stressing in your mind like, oh, should I enter right now? Do I need to do this? Do I need to do that? No, that's all things you should have thought about before you got into that trade ID. So whenever I tell people, or sometimes you hear me say in the live sessions or whatever, you hear me say, all right, if that fits your trading plan, yeah, perfectly enter. Because what I'm trying to say right there is that it's an entry opportunity. For example, this is an entry opportunity right there, but it's not in my personal trading plan. If it is in your trading plan, then yes, that could be an entry opportunity. But if I just call something and just as an example, then that doesn't mean you should enter. You should only enter if that is indeed in your trading plan. Then yes, go ahead and enter. Perfectly fine, right? But that is very, very important to understand as well. So what is the mental challenge here? It is greedy because you think you'll miss the move. That is the main mental challenge. And again, that is me already assuming that you do have an entry pattern set in stone. So right here, once I have this ST move right there, I could have entered right there because I was like, oh, I don't want to miss the move. I see an ST. I don't want to miss the move. No, I just very calmly, I wait. I just wait. So we have this displacement higher of that. And then on the fair value gap, that is where I want to enter. Perfect. So that is, again, a new mental challenge that we have to overcome, being greedy because you think you'll miss the move. And again, I always like to think that, it's 9 out of 10 times it's the case that price will usually retrace further than you expect it to. And what I mean by that is that, for example, if you didn't get in just yet and you are chasing price right there, then again, that could be a perfect entry if it is in your trading plan. But usually price retraces a little bit further than you expect it to. So that is also something to be aware of, that you don't have to rush into the market. Then what is the next step that we can mess up? That the next mental challenge is a third step. The third step is executing on setup. Waiting for your exact entry pattern. If you don't have that, this is where you'll mess up. So if you don't have an exact entry pattern, then this is exactly where you'll mess up. And as well, if you do have that exact entry pattern and still you start to doubt yourself, as in, oh, I don't know if this is the right entry. I don't know, should I enter this? Should I enter this? Oh, it might be a loss, might be something like this. And then all of a sudden you start going back into the higher time frame and you start going you basically do your whole top-down analysis again, just to be sure, like, I don't know if this is high probability. And then you go into the 4 hour, the 1 hour, the 15 minute again, just to check and just overthinking. When you're at that stage where you are about to enter a trade, even if it's not a good entry, I would just enter it. And the reason for that is because whether it's a loss or a win, we have something to learn from it after it. So usually it's the case where if you are executing on a setup and you start to doubt yourself, all of a sudden it's you just overthinking it, and it might be a fear of losing, etc. So then we need to break the cycle and we need to just say, all right, whatever happens, happens. The risk to reward win rate is in our favor. So all we can do is execute the plan right there, right? That's the injecting logic. So then we just, whatever happens, we might take a loss, perfectly fine. We just enter, we just follow the plan. That is what we want to do, right? So then you don't want to go back into your high time frame. Once you are on the lower time frame right there, you don't want to go back on the high time frame, because that will only confuse you, etc. And you will start forcing an ID again. What we talked about in our before analysis as well is when we stare at a chart too long, we will force IDs and we will come up with an ID, because our brain is a great drama script writer, the best in the world. And when we stare at a chart too long, we will come up with crazy scenarios. The same when we think about a scenario in life which we don't really like and we have our suspicions, then we come up with the craziest scenarios that are probably not true. So when we want to enter right there off of that fair value gap, and all of a sudden we start to doubt ourselves, and then we start looking at the higher time frame again, then indeed our brain will do what? It will force IDs to go against us. It will find every single little small thing, even if it's not on your time frame, because you will start to force IDs. You will say, yes, but the 1 hour here is bearish, so I'm not going to enter. And all of a sudden, all your bullish arguments are thrown at the window right there. And there were no bearish arguments in the first place. So that's why if you have a list next to you, maybe if you're just starting out, maybe you have a list next to you with why are you taking that trade again? Stating the bullish arguments and the bearish arguments. And then you need to have something logical on the side. So something logical that reinforces the ID. All right, I am taking this trade. It was a good trade. Even if it's a loss, it's a good trade, no matter what happens. That is very important. So something logical to keep you within the guidelines. Not too far right, not too far left. No, just in the middle, keep on following the road. That is what we want to do. So having something logical like bullish and bearish arguments list. Again, reinforcing the idea, why are we taking this trade again? Because we tend to forget that when we get to the executing part right there. Then risk management is the fourth step. So the fourth step, risk management, knowing your risk percentage beforehand. You always know it beforehand, not when you just open your MetaTrader and you're like, ooh, I need to rush in, blah, blah, blah. No. We know it beforehand. That is very important. And because from experience as well, let me just touch on that as well. From experience, I have been there where I just woke up and I was like, oh, I see a setup. I need to get in. And then I didn't do a proper before analysis. My foundation was not right. So my basics were not right. I was sleeping late. I was not eating good. So I wake up late. When I wake up late, I force an ID because I tend to wake up and then I'm like, oh shit, I need to get in the market right now. And what happens then is I force an ID, which is likely not there because I'm not focused. I'm stressed because I just got out of bed. I'm too late, essentially, to hop behind the charts, etc. What then happens? I open my MetaTrader really quick. I don't check the risk that I'm using. And then I just hop in the trade with maybe too much of a risk, which wasn't the thing I had established or I didn't meant to do. Then eventually I lose the trade with too much risk because I forced the ID, because I rushed into the market. Again, that's a whole cycle on its own, right? It's a whole cycle. And the cycle can easily be broken, but it's being aware of that cycle in the first place. And again, I'm stating these cycles because I have experienced it all. So everything here has happened to me, everything. So right here, it is again, risk management, knowing your risk percentage beforehand and knowing where to take profit and where to go break even. Again, this is a huge one. Take profit is something you should have established before you even get in the trade. And what I mean by that is I know I'm likely going to target a 1 to 2. If the draw liquidity is a little bit above a 1 to 2, perfect, I'll target a draw liquidity. Now, that is my subjective side. You might not be ready just yet for that subjective side. So I would always advise just a 1 to 2. It takes away a lot of thinking if it's just a 1 to 2, because it's like you have no stress. You just let it ride on 1 to 2, perfectly fine. Again, the context high could also be your simple draw liquidity. So 1 to 2 context high. Perfect. As long as you have guidelines in that. And then going break even as well is a great, is something that we need to pay attention to a lot. Because if we don't have a set rule for going break even or somewhat of a guideline, then when we are in the trade and our emotions are sky high when we are in the trade. And again, that is just something that will naturally come, right? It's something that will naturally come. When we are in the trade, our emotions are just a little bit higher. They might not be as high as someone else that's trading, but they will still be somewhat inflated, right? They're still more so there. So what happens then is you can't think super logical anymore. You might still be able to, based on your experience, etc., based on how you can control your emotions, but somewhat of your brain is a little bit fogged up. It's not thinking that clear anymore. And what we want to have in that moment is guidelines. When we have that guidelines of going break even, that is very important. So go break even based on order flow when price has no reason to return back to your entry, for example. Things we went over in the execution week as well. That is very important. Again, that's the same thing as your entry pattern. If you don't have a break even rule, then you might see this move higher right there, and you might all of a sudden go break even right there, which is not in your rule, etc., or in your guidelines. Now, I went break even, or I closed this trade out for a very particular reason. If you want to see that, check out the trade recap. Again, I will not touch on it here. Then again, going break even, etc., things like this, they will also develop. So at first, it is very important that we do have guidelines. Once we have guidelines in the beginning, then over time you will see, hey, my intuition is taking over. I can see things more clearly. I can understand why I would already go break even here. I can understand why I shouldn't go break even here. I can understand these things. That is when you're at your A game, like we talked about as well. When you're at your A game, eventually you have the experience. So maybe within, well, I would say within 6 months and 1 year, then truly, if you stick to the same thing, then your intuition will take over eventually. And you will see the things I'm sometimes talking about where I was just like, yeah, I went break even here. And you'll understand it like from your perspective as well. And that is very important to have. And that can only be achieved if we stick to the same thing. So that is very important as well. So exit strategy, knowing RTP before we enter the trade. Again, exit strategy, because that is also very important, because when you're scaling your accounts. So I don't think it's crazy, because I think over time we will have members who are trading with 500K accounts, maybe 1 million accounts through trade copiers, etc., with a lot of capital. So you need to be prepared from the beginning already, that you know where your TP is and that you're not looking at your P&L whilst you are in the trade. Again, it is important that hiding your P&L, etc., those might be great short-term solutions, but they will not fix the issue on the long term. And what I mean by that is like sweeping it under the rug, under the carpet, right? It's like just sort of ignoring the real cause of the problem. And the real cause of the problem is because you can't handle the numbers, because you have that cycle, you have that emotion that's coming up, etc., that fear. that is where we need to break that cycle and inject logic again. That is how we overcome the obstacle and we sort of remove the roots of our problem. That is what we want to remove. So I don't think the solution is necessarily hiding P&L, but you always want to take into account percentage. So for example, if I see a lot of money floating on a trade like this, for example, that I took right there, I can see a lot of money floating. But percentage-wise, it's not that much. So I know my TP is set at a certain price because if that doesn't play out, my RR will also mess up. So that is very important to understand as well. You want to look at the percentages, etc. You want to look at your trading view. The MetaTrader, whatever you use to execute, is only to execute in a sense. You click a button, you execute, and you just look at your trading view right there. That's all you need to focus on. So then we have the aftermath, because that is the sixth step, by the way. The sixth step is the aftermath. Lose, break even, or win doesn't matter. Let me put it on the screen as well, right here. Yes, perfect. Perfect. Aftermath. Lose, break even, or win doesn't matter. Reflect and never rush back into the market. Sometimes you will have a temptation, and I still have them. I do. And I have a lot of emotions still, of course. But the aftermath, lose, break even, or win doesn't matter, is very important. Because if you don't see the bigger picture in that moment, and you see a new fair value gap higher after you got taken out or whatever, then you might just rush into the market. And again, after a loss, break even, or win, you are not the same person anymore. That is something to accept. First accept it, and then over time, maybe after a year, you can change your strategy, etc. And you can take another trade, etc. If you do notice, all right, I'm missing a lot of trades because I get taken out early, etc. But rushing back into the market is, of course, very impulsive. So when you take a loss, break even, or win, you're not in the right mindset anymore. And when you then rush in, it's usually just an impulse because you see one fair value gap and you're like, fair value gap equals displacement, so need to get in. And then we lose the track of our trading IDs, etc. is very dangerous. That is what we want to avoid. So after a loss, break even, or win, ideally, we immediately, again, when you see it happen, we want to reflect. So what happened? All right, we got taken out. What will we do right now? Will we rush back into the market? No. All right, I will wait for new context, a new setup, etc. I need to have patience. Perfect. But I never rush back into the market. Again, all these 6 steps right here is every single one is a mental challenge. You are constantly getting exposed to mental challenges. Can you see now, if you put this in perspective, it's extremely hard to trade. It's extremely difficult. So when you can master this, I always tell people, if you can master trading, you can do anything in life. It's the biggest mental challenge there will ever be. And that is very, very important to understand as well. And that is the whole reason why the trading concepts we use are designed in a certain way to benefit you, to help you achieve that goal. That's what a lot of people, again, I'm not speaking to the majority here, but a lot of people don't seem to understand that because they are sort of getting distracted by the chart. Where you're distracted by the chart and you're facing a mental challenge constantly. It's like you're running a track, you're running an obstacle, then you get hurdles. So you're already a little bit, you have literally physical obstacles right there that you need to all of a sudden jump over whilst you're running. And then there's also a guy that's screaming in your right ear. There's also a guy screaming in your left ear. You're also having a blindfold on. It's like, what do you want me to do? What do you want me to do? I'm too distracted by the charts to focus on these mental obstacles that will come my way. So I will mess up. Of course I'll mess up. And that is a huge part in everyone's trading journey. Once you realize this and once you realize the whole foundation that we work with here, you'll never unsee it. Like the algorithms say, right? Once you see it, you'll never unsee it. No, this is our example. So that is very important. That's the whole reason why we do these things, is because you have these mental challenges. And again, they go way deeper. These are just the tip of the iceberg, right? They go way deeper than this. And if you are distracted by the charts, you will not see it coming. And when you don't see it coming, it will control you. When it controls you, you are messed up, politely said, because you will blow that account, etc. Because something has hooked you. Something has hooked you. And that can be anger, can be fear, can be greed, because you're not seeing it coming because you are too distracted by the charts. And that is very important. And that is also why we have guidelines in everything what we do. That is why I say 80% mechanical trading plan, because that 80% is just the right amount to not have a very bad and ugly trading strategy where we don't make any profits and we wait 5 months until we get a setup. No, that's not what we want, of course. So we have 20% intuition. That 80% mechanical is just good enough to keep our psychology in check. And the 20% intuition is just low enough for our emotions to not get involved in our trading. That is exactly why everything here has been thought of. Every single thing has been thought of. And that is very important to understand as well. So again, what we mentioned in the beginning as well, as long as you know where to look for an entry and what your lower time entry pattern looks like, then it's fine. If you use the top-down analysis every single step, then there's very minimal reasons on how you can mess up. If you just stick to it over time, etc., etc. All right, then tomorrow we have psychology outro, and then we go into MMP week. All right, perfect. Thank you.